Hello everyone. This video is for the Group 5 Cumulative Software Problem, Chapter 3. On your screen, you can already see that we have the Canvas page open. I also already have, in a separate browser tab, I have the Group 5 Cumulative Software already opened, Group 5 Cumulative Software Problem, and I'm going to scroll down until I get to Chapter 3. I'm going to right mouse button and I'm going to open in a new tab as well. So here are our instructions. I'll go ahead and blow those up a little bit. In another tab, I have the ProConnect already open. This is what we're going to use to enter the information for our tax return. And then finally, we have the MindTap Cengage Learning. This is the actual textbook, and we're going to be working on Chapter 3 now. I'll go ahead and click on Chapter 3 link, and then we go to the questions and problems. I'm going to scroll down to the very end and then work myself back up until I get to the beginning of the problem. Group 5 Cumulative Software Problem. Okay, so looking at the specific problem itself in the textbook, the following additional information is available for the Albert and Allison Gator family from chapters 1 and 2. Before we get started, let's go to the instructions. This tax return is a continuation of the Gator tax return that you prepared in chapter 2. Do not add a new client. The easiest way to handle the additional information is to copy the tax return for Gator prepared in chapter 2. Click on the tax returns in the left-hand margin and use the View Return drop-down arrow for the chapter 2 Gator return to copy return. If you select the copy by clicking the name, you may rename the return under the same View Return drop-down box. Let's go to the tax software. Let's go to tax returns. At this point in time, you should have two. We do want to start with chapter 2. This is where we left off from chapter 2. So we'll go ahead and click the View Return, click the arrow, we'll copy the return, and now we have 3. The one we want to work on now is the copy. We'll go ahead and click on the arrow again and rename the return. And this time we'll leave it as Gator Chapter 3. Let's get rid of copy. We don't need that. So click on rename. And now we have the Chapter 3 return. We'll go ahead and click on it. And we end up at a profile. We have profile, we have the input tab, the check return, and the file return. The instructions go on to say, from the menu at the left, select General, Client Information, and scroll down to Spouse Information and enter the spouse's occupation. We'll click on the input return. We'll look at General, the General category. We'll click on Client Information. And now we're looking for the spouse information. We'll scroll down. We see filing status, taxpayer, spouse information. Under the occupation, we had previously entered unemployed. We're going to change that. Let's change the occupation from unemployed to self-employed. To enter the financial information for the spouse's business, from the menu on the left, select Income, Business Income Schedule C, which will land you in the details. Okay, we were at General. We're going to scroll down to Income. We're going to scroll down until we get to Business Income Schedule C. And now we have the area where we can enter self-employment income. It now says to enter the information provided. We're going to go ahead and select this so when we come back to it, we know where we're at. The information is going to be found in the textbook. Let's go ahead and read through what the textbook has to say. On September 1, Allison opened a retail store that specializes in sports car accessories. The name of the store is Tojay Pass. The store is located at 1966 Southeast Federal Highway, Stuart, Florida 34994. The store uses the cash method of accounting for everything except inventory, which is kept on an accrual basis. The store's EIN is listed. Allison purchased inventory in August and then started her business on September 1st with 40,100 of inventory. The TOJ Pass accountant provided the following information. So we see we have revenues, we have the cost of goods sold, we have expenses, and other income. We can use that to enter the information into the tax return. Let's get started on that. The principal business or profession. According to the instructions, they told us that this is a retail store and it sells auto accessories. The principal business code, I'm going to go ahead and give that to you. It is a code that is maintained by the Internal Revenue Service to represent certain industries. There is an arrow that you can click on and we can go search for it, and essentially looking for the category that best fits for retail store. In this case, I have it for you. It is 441300. This is 441300, automotive parts, accessory, and tire retailers. The business name is TOJ Pass. The address that was provided in the instructions, 1966 SE Federal Highway. The city is Stewart, and that is in the state of Florida. And the zip is 34994. The instructions also provided the EIN. The EIN is 987321654. The instruction told us that the accounting method is cash. Click on 1. Inventory method will be listed as cost. We'll select 1. There's no reference to a change of the inventory method. This business is Allison's, so we'll go ahead and select spouse. And this is the first Schedule C, so we'll go ahead and, since this business was started this year, we'll go ahead and select first Schedule C. At this point in time, I don't think there's anything related to inventory, change inventory methods. I think we're good with this. For other information, I don't believe that they provided any information that would be relevant here. Let's read through. Did not materially participate. She obviously did. Personal services not material income producing factor. That's not discussed in the instructions. This is not investment. She's not administered. There's no LLC involved. And we're not going to exclude from SE retirement plan deductions. The instructions did tell us that if this was required, we will file Form 1099s. We'll go ahead and select 1 for yes. Okay, so after we've selected that, we'll go ahead and choose the income statement. And now we have a template of an income statement that we can use to enter the information from the income statement provided. We'll look at the income statement that was provided. Looks like our gross sales are 64,800. 64,800. Less returns and allowances, 500. Net sales will be automatically computed. Let's continue down. The cost of goods sold. The beginning inventory was 40,100. We had purchases of 37,900. Inventory available would be an automatic computation of adding these two together. Less ending inventory of 38,000. Inventory at the end of year, 38,000. Cost of goods sold should be automatically computed, and then the gross profit loss should also be computed automatically. We'll move down to expenses. Most of these we can enter directly from here. Some of them we may not to. We may have to go through another schedule. First, advertising is at $3,000. Advertising, $3,000, that's an entry. Dues and subscriptions are blank, so we'll leave that. Gifts are $210. The expenses are listed in alphabetical order, so I would expect gifts to be right after A, B, C, D, E, F, G, somewhere around in here. It's not here, so what we'll do is we'll scroll down to the very bottom where it says other expenses, and we'll describe it as gifts. And let's look at what the amount was. According to the income statement provided, gifts are at $210. Let's go ahead and enter that. Going back to the income statement, insurance is listed at $1,000. Okay, we've entered that. Interest is listed at $1,600. I don't see any references to whether this is more or related to mortgage interest. I will assume that it is not. If we have to make that change, and we'll do that later. But at this point in time, this $1,600, maybe it's from a loan, separate loan. We'll put this under interest category and list it as other. Legal and professional are listed at $400. Licenses and fees are listed at $800. We'll go down to the section where it says taxes and licenses. And we'll click on the other for this section. And again, it's listed as licenses and fees. Miscellaneous listed at $100. Office expenses listed at $1,300. Payroll taxes are listed at $500. We'll look under taxes and licenses, specifically payroll taxes, and enter that at $500. Postage appears to be blank. Rent, $7,500. Let's look for rent. There's no reference to vehicles, machinery, equipment, so I'm going to go ahead and list it as other. $7,500. Repairs and maintenance are listed at $400. Under repairs, we'll put the $400. Supplies, $600. Telephone, $775. Travel, $900. Uniforms, 400. Utilities, 1,050. Wages are listed at 3,500. I think that's everything. Now, before we move forward, let's go ahead and make sure that what we've entered is consistent with the tax return provided in the problem. I'm going to click on Review Return. And I'm going to click on the Schedule C section. And I'm going to compare that to the totals listed on the income statement provided. Total expenses are listed at $24,035. Total expenses on our entry are total $24,035. The net income listed at $265, and our form Schedule C, $265. So what we've entered into the Schedule C matches what is provided on the textbook. Okay, I'm going to close this. A review of the expense account details reveal the following. The travel expense includes the costs Allison incurred to attend a seminar on a sports car accessories. She spent $300 on airfare, $400 on lodging, and $100 on a car rental, and $100 on meals. Allison has proper receipts for these statements. Let's look at the travel. The travel is listed here at $900. I guess if we add 300 plus 400, that's 700 plus 100, 8, and 100 is 9. So that's the total $900 that is listed under travel. Now the only problem is the $100 on meals. Meals would not belong under travel because only 50% of those costs are deductible. So what we're going to do is we're going to go to the tax return. We have travel here. I'm going to go ahead and click on the detail. Under this description here, I'll put total. And then right underneath it, the next line, I put meals. And what we're going to do is we're going to take $100 out of this. So I'll put minus $100 for meals. So now travel is listed at 800. And then just below travel, we'll go ahead and put meals here, and we'll put the $100 here. The gift account details show that Allison gave $30, a $30 gift to each of her 7 best suppliers. $30 to each of her 7. Well, $30 times 7 is $210. Let's see what's listed up here. Gifts, 210. That looks good. Now, according to tax law, the maximum that you can give is $25 in gifts. 25. She listed 30. The maximum is $25 in gifts. So $25 per supplier in this case. So we'll have to update the gifts. Scroll up to, oh, we have it under other expenses. We listed it as 210, but in the gifts area, I'm going to go ahead and put in parentheses 7 times 25 maximum. And if I take my calculator out, and I say 7 times 25. That means instead of listing 210, I'm going to list $175. Let's go back to the textbook. The supplies expense account detail reflects the purchase of 250 pens with the TOJ Pass logo inscribed on each pen. Allison gave the pens away to suppliers, customers, and other business contacts before the end of the year. So I don't see any adjustments we need to make for supplies. We are good to go. The next bullet point says uniform expense reflects the cost to purchase polo shirts. Allison provided for each employee, but not herself. The shirts have the TOJ Pass logo printed on the front and back and are required apparel while working, but otherwise are just like any other polo shirts. Now, those shirts are for employees, so the amount listed for uniforms appears correct. I don't see any adjustment for that. The license and fees account includes a $650 fine TOJ Pass paid to the state of Florida for environmental damage resulting from an oil spill. If we look up to licenses and fees, we have 800. So what this suggests is that of that 800, 650 was a fine. Fines paid by the business are not deductible. So that 650 should not be deducted. We'll have to make an adjustment in the tax return for that 650. Under taxes and licenses, we had entered other. Let's click on it. And then below it, we'll type in fines and we'll subtract 650. Going back to the textbook, I think we've covered all the bullet points here. Let's go ahead and go to car and truck expenses. Allison drove her 2016 Ford Explorer 1,651 miles in 2024 for business related to TOJ Pass. The Explorer was driven a total of 11,450 miles for the year. Included in the total 11,450 miles is 5,000 miles spent on commuting to the store. Allison has the required substantiation for business mileage. She uses the standard mileage method. Vehicle information is not entered directly into the Schedule C. We go to our instructions. To record vehicle expenses, from the menu at the left side, select Deductions, Vehicle Expenses Business, Expense 2106, and that should put you into the Vehicles Employee Business Expenses 2106 screen. So let's do that. Right now we're in income, specifically Schedule C. We'll scroll down, we'll see deductions. We'll click on deductions. That now lists it up here, and we'll look now for vehicle expense 2106. That's the form we're going to enter the information. We won't enter anything different because it's the same occupation on the 1040. On the form, we'll select Schedule C, and then under the activity, there's only one, so we'll select that if it's not already selected. This is the spouse 2106. Check that if it's not already checked. And let's go to the instructions and see if there's anything else here. Scroll down to vehicle information. All right, let's scroll down to vehicle information. Here's where we're at for vehicle information. We're still on the 2106. Check the box for vehicle is available for off-duty personal use. Scroll down to vehicle expenses and enter the description of the vehicle. We'll have to go to the textbook to see that description. 2016 Ford Explorer. For the date placed in service, enter 9/1/2024. Enter the total mileage, the business mileage, and the commuting mileage. That information is provided in the textbook. So business-related mileage was 1,651. The total mileage is 11,450. And 5,000 was spent on commuting. Okay, I think we have it. We're going to go ahead and take a look at the review, the return, to see what filtered through to the Schedule C. And we have car and truck expenses, 1,106. We'll check on that later to make sure that that's correct, but at least we know that the details are flowing through to the Schedule C. Let's close this. Okay, back onto the textbook. In July, Albert loaned a friend $7,000 so he could buy a car. Albert's friend lost his job in 2024 and stopped making payments on the loan. He plans to start making payments again, however, with additional interest as soon as he has new employment. Generally speaking, taxpayers can write off loans given to others when it's expected to be paid back and it is not. They can write off the uncollectible amount of the loan. However, the taxpayer must determine that it is truly uncollectible. It appears to me that there is a plan to start making payments again. Therefore, as long as it's expected for that money to be paid back, it would not be deducted. In 2024, Albert started to mount and stuff some of his trophy fish to display in his man cave at the Gator home. Some of his friends liked Albert's taxidermy work and asked him to prepare a couple of trophy fish for them as well. Although he doubts he will ever sell any more stuffed fish, he received $175 and had no expenses related to this activity in 2024. Let's go to the instructions that talks a little bit more about this. For the taxpayer's taxidermy work, from the menu on the left, select income and Social Security benefits, alimony, miscellaneous income. So we are going to enter this in the tax return. It will be under the income section. And it will be under the Social Security benefits, alimony, and miscellaneous income. So we'll look under to locate that area. Looks like alimony and other income, and just below that it says activity not engaged in for-profit income. The instructions ask us to enter that information into there, and the specific information is $175. So that's what we enter for the amount of activity not engaged in for-profit income. Let's go back to our instructions, see what more they have for us. You can review the tax return at any time by selecting Review Return, which we've done. And at this point in time, I think we're in a position now to check to make sure everything is correct. Let's see one more paragraph here. Combine this new information about Gator family with the information from chapters 1 and 2 and complete a revised 2024 tax return. Be sure to save your data input file since the case will be expanded with more information. Okay, let's go back to the tax return and let's go ahead and click on review the return. All right, so here's the return. Now we're going to go back to Canvas and we're going to scroll down to under modules. We'll scroll down to the module we're in, which is module 6, week 6. Here's the solution. Under the cumulative software problem, we have the solution here. We'll click on it. And now here's where we have the solution. We're going to go ahead and grab that tab and set it off to the side here so that we can split the screen. We're going to open it up as much as possible. Now we're going to go back to the actual review the return. Oh, I think I pushed this up. When we review the return, it came up here. And then, so essentially now we have both the tax return and we have the solutions. I'm going to go ahead and click on the 1040. Let's check on that. So here's what's in the tax software. Here's the PDF that we can double check our information. I'm not going to spend too much time worrying about that. We've already confirmed that. Everything is still the same. Wages haven't changed. Tax exempt, no change here. 133 here. I'm looking at lines 1Z, 2B, line 7, still 180. So line 8 is at 98, and that hasn't changed. So the totals for line 9, 83,588, that matches. We've confirmed it. Adjustments to income is still at 12,000. We're good to go. And now our adjusted gross income is at 71,588 and 29,200. That matches. Everything looks good. Our line 15 is at 42,388. That's what the solutions say it should be. We'll scroll to the next page. Line 16, 4423. And then I'll just go ahead and skip down to line 24, 3923. If it were wrong, I'd go back up and look at the detail, but it looks perfect. And then we can go ahead and go to the line 34 and it says 3579. So we're good. Everything appears to be correct on the 1040. Let's go to the Schedule 1. Schedule 1 shows that our business income is listed on the Schedule C as negative 106. That's what's listed here. Unemployment compensation is the same as it was before. We have 5750. Looks like we have the activity not engaged in for profit of 175. That is taxable income, so that's added to the income. The total is 5925. 5925 is listed there, and 9819. So we are good on that. Scroll down to part 2, adjustments. And still the same adjustment we had from previous chapter, 12,000. Social Security number, date appears okay, 12,000 is listed. And then moving on to Schedule B, the total is 1133, no changes. Line 6 is 1750, no changes. Now we've got the Schedule C, and we already looked at the total. We know that the total looks correct. It's minus 106, and that's minus 106. But we can kind of just look at the detail that we listed up in here. We have Allison Gator, her social the retail store, the business code is 441300. We have the name, the EIN, confirm that, and the address. We have a cash basis, and everything marked here is yes. And we can scroll through the detail, but I'm pretty sure we'd find that everything is what we need it to be. All right, let's go to the next page here. That's page 2 of the Schedule C. We have the inventory or the cost of goods sold computations. Looks like everything looks correct there. Let's go mileage information. Now, because of the nature of what's going on, it didn't require us to generate the 2106, which was what we entered the information into. But nevertheless, it does filter to Part 5 of the Schedule C, which shows when it was placed in service, the amounts listed for business, commuting, and other. All 3 of these are marked X'd. We have gifts, 175, miscellaneous, 100, telephone, 775, and uniforms, 400. The tax software is listing in alphabetical order, but apparently this is that? No, miscellaneous is listed, so don't worry too much about the order, just make sure that each line item is correct and the total is correct. I think we're good. The information will be saved into the tax return. There's no requirement for you to print anything, but now you know you're ready to go on to chapter 4.